Welcome to the Daily Brief, where I'll go over the action in the market for Friday, February 10th, and then we'll see how things look for Monday, February 13th. We had a small up day on Friday, not enough to really shift things back positive, although in the background, things still remain positive, but we're starting to see some weakness coming in to the market. Anytime we try to get up above resistance, we've been backing down, but fortunately, so far, support has been holding. So let's go back and talk about what happened. Right at the open, we had a lower open. Prices then rebounded back up above the unchanged level. And that's pretty much how we spent the day. We chopped above and below the unchanged level, and we closed pretty much near the high for the session. We were up 0.22%, and volume did drop to below average. If there's one positive thing we can take from this, as we've been declining, we have seen volume really drop off. The technicals are still positive, but with some weakness starting to enter. We're not really seeing any conviction right now, either to the upside or downside. The markets continue to be fixated on inflation and interest rates, which are feeding over into the earnings per share as well as the valuation concerns. We want to keep an eye on the geopolitical events that are happening. Earnings will still be coming out in the upcoming week. We're going to get a little bit of scheduled Fed speak. And there's continued back and forth about the debt ceiling without really anything getting handled. It'll probably come down to the point where it's an 11th hour type of decision. It'll start to make headlines in the news. Everybody will start to talk about it, and then something will get done. As far as what happened in Friday's session, we did have a gap lower, and then we went back up to the unchanged level, stayed up there for a little bit, but then fell back down, only to come back up, and then we dropped down. This was where some weakness appeared to be developing. When we came right down to this level, this is about at the 20-day moving average of the S&P. So we're still above that, and I have a chart to show you. We were able to bounce back up off of that, go slightly positive, only to come back down, and then see a little bit of strength going into the close, and we closed just a bit off of the high. What are some comments that we can make? The S&P is still below 4,100. That's a psychological level, but it's now becoming more of a technical level. Growth did outperform value in Friday's session. The 20-period exponential moving average is providing support right now, and I'll show you that. We have to ask this question. Is weakness sneaking in right now? We're not seeing an awful lot of strength. Things aren't really starting to build. We're seeing more weakness coming into the market. On a short-term basis, we still have that one stochastics chart that is extreme positive, but on the other hand, we have the Stoch RSI, which is extreme negative. The dollar was up and interest rates were also up in Friday's session. We still have all the yield curves that I plot inverted. Sentiment is still positive. We're reading at 70 right now. That's not extreme. We had dropped a bit from the reading of 72 last time. I'll talk about the economic reports on the next slide. Our trend is still positive and we're above that ADX, so we're getting a little stronger, but it's starting to roll over a little bit, and I'll show you the chart of that. We're above 20. I've changed our bias to mixed. Even though we had a slightly up day, it wasn't a lot of conviction, and we spent most of the day in negative territory. And I've also changed our momentum over to mixed. As far as the economic reports, we did get consumer sentiment. That came in at 66.4. They expected it to come in at 65, so a little bit better than expected. The last time we had this report, it was at 64.9. The Treasury budget came out and it showed a deficit of $38.8 billion. A year ago, we had a surplus of $118.7 billion. The Ulcer Index is showing how we're coming up a little bit as far as the fear is concerned, but we're still well below this moving average and have a long way to go. This is lining up more with the VIX and with our sentiment where we're positive and showing some complacency. The VIX is still up above 20, even with the update. It ticked down just slightly on a closing basis where we're starting to break out a bit on the bar chart, but we closed near the low for the session. And the VIX of the VIX is showing yesterday how we had a pickup in volatility. Well, we're kind of still at this higher level right now, even though we ticked down slightly for the day. Our trend is still showing that we're above this moving average, but it's rolling over. And another day like what we've seen, where the markets aren't really going anywhere, we could see this drop below the moving average. But we still default to the positive because the green line's on top, even though it is declining. The daily chart shows how we came right up to this resistance level and we're coming back down. We did fall below the December highs, and now this longer term area, which is support now, is actually continuing to hold up. On the bottom, you can see where volume dropped off and we were below average. Here's a longer term look at that same chart. We measured this support level from a low back in 2021. As long as this can hold, that's positive, and maybe we can actually start to move up a little bit higher. The Stochc RSI is still extreme negative. Looking at our stochastics chart, not extreme with the short and intermediate term, but we're still rolling over with the longer term, short term stochastic. Our oscillators are starting to show some weakness. The slope is rolling over, and we've been watching that closely. The TSI is crossed over negative. The MACD is just about ready to cross negative. The PMO, not quite there yet, but looking weaker, as is the PPO. Our longer term oscillators continue to be positive, but are starting to show some signs of rolling over. Here's the PMO, where it hasn't crossed over negative yet. However, if you look at the bottom, based on price and volume, we have already crossed over. Sometimes this leads what the PMO is going to do. The bullish percent index, after giving us a positive reading above 70, has now started to fall back. So we want to keep an eye on that. That's just looking at the internal strength or weakness inside the S&P. Here's the NYSE bullish percent index, after breaking out and spiking up, is now starting to fall back. Our parabolic SAR system still has the dots on top, so that is negative. The Chaikin money flow still positive overall, but is showing some weakness even though we ticked up slightly on Friday. Looking at the double and triple exponential moving averages, we're now starting to break below this anchored moving average going back to the all-time high. We're coming down now to this double exponential moving average based on 50 periods. That acted as support, and we were able to bounce up off of that. The TTM squeeze is still positive, but it's showing some weakness. We have the darker blue bars, and they are descending. And the go-no-go system, after giving us a go, that's the blue, it switched over to more of a lighter blue color, and that's more of a neutral with a positive slant behind it. Our short-term fib chart, we're still in no man's land. We're back below this 100% retracement. We're still above this other retracement level at 4,007, which could act as support if we continue to fall. If we go back up, we might hit more resistance at this 100% retracement level. Here's a longer-term look going from the all-time high to the October low, where we came up to this 50% retracement, really hitting a lot of resistance here and now backing back down. Longer term, going from the COVID low to the all-time high, we're still in no man's land. We have 42.14 or so above where we're at, and we have 40.20 below where we're at. Swollen trading oscillator based on price was pretty much sideways, but based on volume, it's continuing to decline, and both of these are below zero, so that's negative. Here's the 20-period moving average chart showing both a simple and exponential moving average. We came right down to this blue moving average, which is the exponential moving average, before bouncing up off of that. Most people tend to use the simple moving average, and we're still a little bit further above that, but we'll be watching for this to be support if we continue to fall. Looking at our moving average tree shows pretty much the same thing with the 20-period simple and exponential moving averages. Can we bounce up off of that? The Elder Impulse system has switched back to neutral. It had gone negative, but with the slight uptick that we saw on Friday, it's now back to neutral. Here's the KEGI chart, which is showing a change where we had been black and going higher. That's positive. Well, now we're starting to see red and it's going lower, and that's negative. The summation index based on price and volume continued to go down after hitting this extreme level, matching the summer highs that we saw. So this is turning more negative. And then the new highs, new lows, didn't really see much of a change here. So our moving average is starting to roll over, and it's pretty much on top of the 5-period. And our 10-day differential is flat to slightly declining. Volume has really been dropping off, and the histogram continues to go down as well. That could be positive because we've been having some trouble. We've been going down, and to see volume really pull back is usually considered to be positive. Our longer-term moving average study, with the update, we ticked back up with the 150 and the 200, so they're both extreme positive. The diamonds have switched back to neutral after being negative. The NASDAQ, after hitting this R1 level, has been falling back down, and the same thing with the NASDAQ 100. The Qs, looking at the Elder Impulse system, continue to be neutral. The NASDAQ 100 from the all-time high back down to the October low. Again, we hit this 38.2% retracement level and have been bouncing back down since. The small caps, after hitting R1, have been declining, but we do have a recent golden cross. We have a positive backdrop, but we're seeing negative price action. And here's another chart. This is the Russell 2000. This is the index I used for a long time to measure the small caps. Well, they sold to somebody else, and it doesn't seem to be as popular anymore. So I switched over to the Standard & Poor's small cap index. This is showing how we came right up to this resistance level, and we've been backing down. Small caps have really been doing well, as have mid caps. And so to see them show some weakness is feeding more into the market. On the top, you see where we have an RSI. After giving us an extreme positive reading, it's dropped down. It's still right at 50. Above 50 is positive, below 50 is considered negative. Then on the bottom, we have a MACD that's plotted on this chart, and that is crossing over negative. When we were falling down in Friday's session, we came right down to this support level, which was the December highs. So we'll be watching to see if that level can hold. The mid caps, after coming up to R1, have also been retreating. That's the negative side. On the positive side, we have a recent golden cross, and price action has been pretty strong. We also have some support at this pivot level if we continue to drop. We've been seeing a real rise in interest rates. This is the 10-year bond yield. After coming back down to its 200-day moving average, it's now bouncing up off of that, and it's actually been able to get above its 50-period moving average. The long-term trend for yields has been positive with the blue line on top and the red line on bottom. The home builders pretty much going with the S&P right now. We're seeing a bit of a decline with the S&P, so the home builders are going down. The ratio is still holding up because as the S&P is going down, so have the home builders. So lately they've had a pretty strong correlation with their relationship. Looking at a few of our possible positive scenario charts, this is still holding up, and it's going to take a long time for this to move. This is really slow because this is a moving average of a moving average. As long as we're above the zero line, that's positive. And here's the same chart just showing the actual 50-period exponential moving average of the highs minus the lows. And then the red line is the moving average of the moving average. So it continues to be positive. We're still extreme positive with our 10-day average of highs minus lows. We haven't really dropped all that much. That could provide some overhead resistance for the S&P. And we're starting to see fear picking back up. We were seeing fear really decrease, and that was giving support to the markets. As fear has been going up, that's causing some resistance for the markets. Our staples are still looking good. After spiking up and coming down, we're coming back up a little bit with our ratio, but it's still far away from producing a new spike. What's our outlook for Monday? The technicals could be turning negative. We're still positive, but we're seeing some weakness really starting to come in. We don't have any economic reports on Monday. We have the whole list of geopolitical events. As I always say, any of these areas in white could come to the forefront at any time. The areas that are in yellow are ones that we're really focusing on currently. How is Monday looking as far as the Stock Traders Almanac is concerned? Well, for Monday, the Dow is up a little bit more than half the time at 57.1. But the S&P and the NASDAQ, they're more positive. They're up 71.4% of the time. And then the other areas that we're keeping an eye on, a lot of this just provides the backdrop that we're working from currently. We do have 2 scheduled speeches coming up this week. On Tuesday, Governor Michelle Bowman will be speaking at 8 a.m. I'm trying to put the times on here so we can see how the market reacts. And then on Thursday, Governor Lisa Cook will be speaking. And those are the only scheduled speeches. Now, this doesn't include any interviews or quotes or statements that members of the FOMC make. What we really pay attention to is what is Jerome Powell saying or not saying. Our different scenarios, kind of hard to go with the down one because we still have this positive backdrop, but the technicals are turning more negative. It's hard to go with the up one too because we keep having days like on Friday. Even though we finished positive, we spent most of the day in negative territory, so it really wasn't a positive day. And we can't really go with the sideways right now because the ADX is above 20 and it's getting stronger even though it's starting to come down. but it's positive with the green line on top. So if anything, we default more to the positive side if we see upward price movement. If we see continued weakness, that will just add to these other areas of weakness that we see starting to come in. Our conclusion, the S&P is turning negative. It could get this positive flare back to it, but we need to see follow-through price action in order to do that. The short term is looking positive, but is starting to turn negative, as well as the intermediate term. Long term, as long as we're above that 200-day simple moving average, that really helps things, and we've seen a recent golden cross in the S&P. Thank you. Hope you have a wonderful weekend. I will look at preparing the weekly video, the intermarket analysis video, the deep dive video, and the supplemental video as I can over the weekend. So I will talk to you in the next video.